All right, a little over 24 hours away from a Fed decision that could hike interest rates for the first time in almost a decade. We've kept them near zero now for the better part of, what, 7+ years? And the markets seem to be prepared for it. What we're looking for is an opportunity to see back-to-back gains in this market, something I don't think we've seen in 27, 28 days. A lot of people who pounce on such data say it was an ominous sign that we're dragging on this long without such back-to-back gains. I think it's frankly looking at chicken entrails and tea leaves. Having said that, I passed it along as among the market lore fears that they're passing along. So it would be significant if we did have a gain today to match yesterday's. We've got people who are far more schooled in this stuff than I. Scott Martin and Jack McIntyre and Jeff Taylor. Scott, to you first. Is it a big deal, tomorrow notwithstanding, for those who technically follow or this market, that we have a gain today after a gain yesterday, because it's been a while?
Tomorrow's not the big deal, Neil. I think the big deal is what happens after tomorrow. This is the new regime of the Fed, which is one that's on this interest rate hiking path. And that's what I think the market and even our own currency is going to have to come to grips with, which is stronger dollar, which hurts S&P earnings, which is higher interest rates, which hurts you, the consumer that wants to borrow, whether it's auto loans or mortgages. And so that new regime of higher interest rates is something that I think the market is not really prepared for yet.
You know, Jack, I was surprised looking at the markets as these first developments came down out of California, that they didn't blink, that it didn't affect so much as a single trade. Now, it might have. I'm not dismissing it, but you didn't see it in the averages. You didn't see a terror, tumult, fear, whatever. We're marking the point of the day at which we did have that announcement. So what do you make of that?
Well, I think it just underscores how important, and actually I think tomorrow is actually important. The act of moving rates higher itself isn't that important because that's already sort of discounted by the markets. But it's that narrative. What is the Fed going to tell us? What is that path of future rate hikes going to look at? And that's the uncertainty, and that highlights how I think important Janet Yellen's press conference is going to be. Absolutely, and we will be covering all of that, by the way. But Jeff Taylor, it is interesting to me, maybe in markets that are immune or maybe used to terror threats, when they happen in Paris, when they happen here, as we did in San Bernardino, and they sort of, take it, and they don't love it, but they move on from it. And today, this threat that might have been for naught in California, completely nonplussed. What do you make of that?
You know, I think it's an unfortunate situation that we've seen so many of these events over the years that I think that the market's sort of become a little bit immune to it. I mean, obviously we care a lot, but immune. But I think one thing we said a moment ago about tomorrow is very important with the Fed and the path for interest rates over the next 12 months.
All right. Well, real quickly, then the Fed hikes tomorrow. It's a quarter-point hike. That seems to be the betting. Then what? What do you see happening if it's a quarter-point hike? I guess it is in the language that she spells out, Janet Yellen spells out. But what do you expect the market fallout to be?
I think it's a quarter point, and I think what's incredibly important for the housing market is this is going to really help the purchase market, because for 10 years people have been sitting back saying, okay, I'll get into the purchase market, buy a house eventually. That first rate hike is actually going to get people off their seats saying, oh boy, I better actually get and buy that house if I'm going to do it.
Get off the fence. Jack,
get off it or it's gone. Yeah, like wait time to buy it be gone.
Jack?
Yeah, it certainly could, because I actually think, so what typically drives mortgage rates is the long end of the Treasury curve. If the Fed is going to tighten, and I think the long end of the curve is going to like that. I think, Treasury yields are going to sort of stay within a range, and I think mortgage rates are, maybe they'll uptick a little bit, but I just don't think that, this, with the dollar being strong and rates moving higher, that's a bad combination for the U.S. economy, so I don't see that unfolding.
Scott, real quickly, the markets seem to be, well, if they're going to raise rates, they must think that we're percolating, right? And that could be explaining some of the buying. What do you think?
I think the market doesn't like uncertainty, Neil. As we get closer to this day, we find out what the Fed's going to do. But listen, I still think Yellen's commentary is going to be somewhat bleak. I mean, I don't know how she can look at this economy and be utmost confident that a rate hike is needed right now. So I don't know if the market's going to take that very well. All right.
We shall see tomorrow. We'll know tomorrow. And speaking of which, this is the place to be for Fed coverage. We're getting at 1 p.m. Eastern time, right through the Fed decision, a little after 2, and through Janet Yellen's press conference. And that is the crucial event. I'll be joined by Maria Bartiromo, Lou Dobbs, Tris Regan, Sandra Smith, Charlie Gasparino, a host of other players, an Avengers financial team here at your service. And yes,